Annelise, so welcome to the studio. The last time we spoke was when the Brexit happened, which is about 9 months ago. Now, you're based in Switzerland, which is very useful. And a couple of people earlier in the week in the studio were saying there's a lot of political stuff going on in Europe that's going to affect markets and investment prospects. But perhaps the markets have underestimated this and been preoccupied with Trump in particular.
I think after Brexit and Donald Trump's victory, people tend to focus now more on politics. Europe is slightly different. I think if we look at Brexit and the Trump vote, it was the anger vote of the people that have lost jobs, particularly the middle class. Europe is slightly different. Populist parties are coming to the fore, but the middle class is not that badly affected because you have a social net. So if we look at France, which is the possible big one, Marine Le Pen at the moment in the first run will have some support, because you have the left, the center, and she's on the right. But remember, at the moment, France is run by the left. So when they go to the second round, it will be probably Macron against Le Pen. And then it looks like Le Pen will only get 20% versus 80%, because the Europeans support the euro. 70% of Europeans support the euro. So for me, the only risk in politics, other than a bit of volatility, is Italy, that might step out. Will that affect the euro? No, because 70%, as I say, support it. And I think the Greek debt repayment that's coming in July can cause some effect.
There's
but
also
for the rest,
the Netherlands, there's
the
election
Netherlands,
there.
Geert Wilders, he will probably win, become prime minister, but he will only get 30 out of 150 seats. So Europe is, the political system in Europe works on coalitions.
Grant, do you agree that it's been a bit neglected, perhaps, in the calculations?
It has, and I think you would agree with me. I mean, we saw with Brexit, the financial markets are not very efficient in pricing political risk. But I do think that this time it could be quite different. But the question that I have is, how is the ECB likely to react if there is a big upset? They said today that they won't be extending any stimulus past December. Do you think we could see a reaction there?
They will step in just like we saw in the UK after Brexit, and they will extend the quantitative easing. They haven't stopped the quantitative easing. They've just tapered it a bit back. Inflation numbers in Europe is looking better. So we have to remember that the inflation numbers is because of the oil price. The oil price hit the low last year, January and February, at $27. It's gone up to $54. So you have in January and February big inflation prints, but by March it rolls over again. So we have the inflation at the moment. Growth is picking up. So they say they will taper, and we might have a taper tantrum later on the ECB. But if there's any political turmoil, they will step in.
Annelise, let's move on to the Fed and the interest rates generally. We are being told that this is priced in completely and there's virtually 100% chance of an increase.
I think so, because the Fed does not like to surprise the markets, and they like to prepare the markets. And they did that last week with Yellen's speech and one of the other governors. So I think given the inflation numbers, once again in America, that's picked up quite a bit, their PCE deflator is still at 1.7, 1.8. It's not near the 2%, but all the other numbers have picked up. So it gives them room to hike by 25 basis points next week.
Just to finish off with you, and we'll chat to Grant a bit about the particular stocks and shares here. From your vantage point in Switzerland, what are the other perspectives, 2 or 3 key perspectives perhaps, that you have developed which we can't have because we're not there?
So the first thing is the political story. We always tend to look at the world from an Anglo-Saxon point of view, which Europe is very different. So to sit from our side, we look at Europe and we say the politics are the same. It's not. As I say, the Dutch will have an upset with Geert Wilders coming in, but he cannot take over the government because governments are formed out of coalitions. So that is different to the Anglo-Saxon world. The fact that you have welfare states is different. So the welfare states have to change a little bit, and the world has to change because we have created GDP growth without creating jobs. So what's being discussed in Europe a lot, and funnily enough in France, is one of the leading countries to provide people with a guaranteed income, which I think is also a bit advanced. America is now starting to talk about it. So that is different. And I think politics are different. So when the rest of the world talk about whether euro will survive or not, 70% of Europeans support the euro because it's a geopolitical decision. We don't have mountains, rivers, or the seas to protect us against Russia and Turkey. So you need that coalition of the euro, and it's a geopolitical discussion.
Great stuff. That's Investec Wealth and Investment in Switzerland, Chief Investment Officer Annelise Peers. Good.